Welcome back, everybody. I have Wendy DeBruzen from Benchmark Mortgage here with us today.
Hello.
She drove all the way from Austin today to see us. She has some other things to do, but she also came to see us in person, so we're very happy to have her. Okay, just to let you know a little bit about our guest today, Wendy DeBruzen. She is a certified divorce lending professional with Benchmark Mortgage. She does a lot of divorce mortgage planning. So you may ask, what is that? Divorce mortgage planning is the ability to put into play the desired outcome by pairing the needs and options available while incorporating the necessary details and clarity into an executable settlement agreement to obtain closure and peace of mind successfully. So if you work directly with a divorce team, they incorporate divorce mortgage planning into the overall process with a unique and solid understanding of the intersection of family law, financial and tax planning, real property, and mortgage planning. So stay tuned for this conversation with Wendy DeBruzen. Can you tell me a little bit about how you got started in the mortgage industry? I know you've been professional in this space for like 25 years.
Yep, I got in 25 years. I actually started out in marketing. So my degree's in advertising. And then I just kind of like was marketing for a large bank. And then it kind of evolved into a loan officer position.
Very nice. And now I know you do a lot of divorce mortgage counseling.
Yep, I'm a CDLP, which means Certified Divorce Lending Professional with the Divorce Lending Association. So we can do CE classes or CLE classes that we have approved that we can, teach attorneys and groups of attorneys. And then I'm also a member of Collaborative Divorce Texas in that group. So my goal is to just kind of help the attorneys, the divorcing team with the mortgage financing side of it. I don't give legal advice. I give mortgage advice and advice on property taxes and, the mortgage, if they need to refinance or if they can buy, kind of what their options are post-divorce.
Okay. That's really cool and very helpful. I'm glad I got to meet you because I know a lot of my clients will have questions for you and I'll have questions for you as well. What do you see as something that comes up a lot with divorces and whether someone can refinance or if they should sell the house? What do you see come up a lot?
Yeah, so the biggest question I get asked is, we're going through a divorce. We're trying to figure out, we have a house to sell. I want to keep it. He or she, let's just say she wants to keep it. But I don't know if I can, refinance it. So what I do is I help them determine, if upfront before they start writing the divorce petition, or the divorce settlement agreement. So I start, I kind of go through the application with them. I have an intake form that I have them fill out so we can kind of get an idea of their income. What are we looking at? Are you having to split the proceeds? Are you having to, or split the equity? And so what does that look like? How are we determining the value? So there's a lot of steps to take, but up front, I basically say, okay, if you're splitting the equity and you're going to do an equity buyout, with a refinance, that's one of the big questions because they're like, well, then it's considered a cash out. Well, no, if you're actually, if it's in the divorce decree, that you have to pay him a certain amount, 50% equity, however that's determined, then as long as you don't get one more penny than that cash back that goes to him, you can't get any yourself, it has to be paid to him, then it's considered a rate and term refinance. And a lot of lenders don't even know that. So so that's one thing. But then, also if they're going to sell the house, there's a lot of, things to look at as far as taxes, who's going to pay the taxes, who gets the escrow account. So there's a lot of ins and outs to it. So it's important for me to get them up front before everything's finalized, to make sure it's written correctly in the divorce settlement agreement and to make sure that, everybody's set up for success post-divorce.
So it sounds like even before mediation, if one side knows they want to explore these options, it would be a good idea to have someone like you read over those terms.
Yeah.
Do you get a lot of questions like that?
Yeah.
Or do you find that people wait till it's too late and you wish you had been involved sooner?
So that's my goal, is to get involved sooner, before it's filed. Or before it's, submitted to the court for
Mhm.
signature, because at that point, I can only deal with what's on paper, what's legally written. So, for example, I had someone that, her soon to be ex is telling her she needs to refinance, but the divorce settlement agreement does not say anything about that. It just says she is responsible for the mortgage, the payments, taxes, insurance, all of that from, as of the settlement date. But he wants her to refinance. That nowhere in there does it say that she has to refinance. Well, her rate is 3.25. The rates right now are double that. So it's not in her best interest to refinance, and she doesn't have to. So, I advised her, based on what this says, I would consult your attorney, but based on what this says, you don't have to refinance. Well, he's telling me I have to. Well, that you need to go to your attorney then and deal with that. But yeah, so that's, that's the biggest question I get. And then the second one is, let's say the husband comes to me and he says, we're getting a divorce. She's keeping the house. She doesn't make enough to refinance.
Mhm.
So I can't get off the loan, but I want to buy another house. As long as that decree says she's responsible for that payment, we do not have to count that payment against him.
Okay.
So, it has to be final. Of course, they can't close, refinance, or anything until the divorce is final. Because in Texas, it's a community property state. So they both have to sign and close. That's the other big question I get is, we're separated. I want to buy a house now. He's keeping the house, but I want to buy a house now. Can I do that? You can, if you want him to be on the deed and title.
Yeah.
And most of them are like, no, I don't want that.
Yeah.
So, just as long as people know, the divorce has to be final before you can do anything.
Yeah.
Before you can refinance, before you can buy another house, it has to be final. You can't just go buy another house while you're in the middle of, negotiating a divorce.
Yeah, that is good advice.
Yeah.
You mentioned the interest rates. So like right now, like you said, they're like 6% or
6.25%, 6%. Yeah.
So have you seen in any decrees language about limits on like refinance if it's within these percentage points, if not these contingencies?
Yeah.
You see anything like that?
Yeah. So a lot of times I'll see, they put a time frame on it. She's keeping the house. She has 6 months to refinance. And what happens if it doesn't, if she can't refinance in that 6 months, then they sell the house. And then there's, other wording on what happens if they have to sell. So that's that's usually what I see. And that's the way it should be written, because, this other one that doesn't have any kind of wording on refinancing, that she's just responsible for the payment. So there's a difference between assuming the mortgage and assuming the house payment and assuming the mortgage.
Yeah, let's talk about that.
Yeah.
Yes.
So there's assumptions, which in the decree it says they're assuming the mortgage. That does not mean that you're going to call the lender and say, now put my name on this and take his off. The lender will not do that. They qualified for that house with both of their incomes. If both of them are on the mortgage, or he's on the mortgage and he just qualified on his own, they can't just remove a borrower because they're both liable. They signed that they're both liable. There's no decree that's going to make a lender say you have to remove him from this mortgage. So assuming the payment is one thing. They can just basically take that decree, take it to the lender and says, I'm responsible for making this payment. You need to start sending the statements to me and I will continue to make this payment. Nothing changes in the loan. Assuming the mortgage, very few loans are assumable. Government loans can be assumable, but you still have to qualify. So in their case, let's say they had a 3.5% or 3.25% interest rate. If she did qualify and they had an FHA loan or a VA, well, we don't want to talk about VA because then if she's not a veteran, that's a whole nother conversation. But if they're talking about an FHA loan that is assumable, she has to qualify. So there's no non-qualifying assumptions. So she still would have to qualify, but that is an option.
That's another really good point. I used
Yeah.
to work in the mortgage industry and
You
we
did.
get calls about like assuming the loan
Yeah.
and it had to go through this whole assumption process.
Yeah.
But that was, well, I was a lawyer, but I wasn't thinking of it quite as a lawyer. I was more doing compliance.
Yeah.
But the part that you're talking about with the divorce, like, I'm like, bells are going off in my head.
Yeah, I remember that. Yeah. Yeah, so that's, one of the biggest questions I get is, can I buy another house if I'm still on the mortgage? If the other person is responsible for it in the decree, then yes, you can.
Very good. Okay, thank you for that. Next question I have for you is how to protect your credit during a divorce.
So that's a good question. I would say that if you have, it depends on if you have joint accounts. A lot of people have joint credit cards, joint, car loans, things like that. I would say if you can separate those, if you can, there's a couple of things. If you typically people are going to close joint accounts because they both, qualified for this credit card with both of their income, both of them on the application when they applied for it. So they need to cancel those, get their own cards. I would say that's important. Now, it could hurt their credit initially by closing the account because, a lot of credit is based on length of credit. And so if you've had a card for, 10 years and now you're just cutting off that time that you had in your credit, and you're starting new, that could initially ding your score, but it's something that has to be done. But I would say that's going to be a big thing because, if they agree that, this person's taking over this credit card, this person's taking over this credit card, and their names are still on them, then it could hurt your credit if they don't make the payment. So I would say those are, easy to separate. And then, as far as just making sure everything's paid on time. If your name's on something, you better make sure it's paid on time. A lot of people go through divorces and get their, I'm not making that payment. He's supposed to be making the payment. I'm not going to do it. And they just don't. And it's going to hurt them. It could hurt them to buy a house in the future if it, drops their credit, because one missed payment can drop your credit like 100 points.
Yeah.
And so I would just say, just make sure everything's paid on time, separate your accounts, close any joint accounts. And, that's probably the most important thing.
Yeah. And what would you say after divorce about protecting your credit? Like
So,
after you're allowed to split up your cards and all of that kind of stuff.
So, as far as protecting your credit, I would just check it every once in a while just to make sure. You can also put credit freeze on, I'm trying to think of the website, but you can actually put a freeze on your credit. As to where if anybody's checking it, you have to unlock it to allow them. So not just anybody can get into your credit accounts. Oh, annualcreditreport.com. So you can go there as much as you want. It's issued by the government. I mean, you could do Credit Karma and all that, but you're going to get all kinds of ads and everything. But the free one that's issued by the government is annualcreditreport.com.
That's good. Because that used to be, really was annual, but now you said you can check it multiple times.
It's called Annual Credit Report, but now they put it to where you can do it as much as you want. And it doesn't hurt your score to check your own credit.
Yeah, that's good to know. I have a case right now where they're divorced and the ex keeps using my client's credit card. So that's why I asked that question.
Yeah. So I would say, is he an authorized user?
Yes.
Yeah. They need to call and remove him as an authorized user.
Yeah.
If it's an authorized user, they can just take them off. So that's a good point. Yeah, that I should have said that earlier. Yes, take off any authorized users off of your account.
All right, now let's talk about child support. How does child support affect the home buying, mortgage, refinancing, all the stuff in your area?
Yeah, so for qualifying, up front, of course, the divorce has to be final before they can close on the house. So if they're looking to buy a home, they can come to me before everything's final. They just can't close on a house until it's final. So I always like to get them up front just to kind of give them peace of mind that they can do something, or if they can't, let them know that too, so they know up front. But for child support, we have to have 6 months of payments documented. So in other words, to say the divorce is final, they can't typically buy a house for about 6 months because we have, if they need that child support to qualify. Now a way around that is to get temporary orders. So let's say, he moves out, he's paying child support, and I'm not picking on the guy, but I'm just using this for an example, but he pays child support, temporary orders saying that he's going to start paying child support now. And a lot of them just do it anyway, but they don't have any orders that say they're going to do it. But we have to have it temporary orders stating that he's paying X amount. Now that might not be the final number, that monthly amount, but at least we have that history. So that 6 months history will start when the temporary orders start. So then that you could buy the house sooner.
I see. Do you need the actual documentation that the payments have been made, or just the order?
Yeah, we have to have documentation that they've been made and the order. Yeah, we have to show that he's actually paying it. Yeah.
Good to know.
Yeah. And then as far as child support or separate maintenance, we can, let's say it's $500 a month. We can actually gross that up because it's non-taxable. We can actually gross that up 25%, gross that up to have a little bit more income for qualifying. So any non-taxable income, we can gross it up to give them more income for qualifying.
Okay, that's also good to know.
Yeah.
Lots of nuggets here.
Yeah.
Okay, so we've also chatted about the best and worst time to get divorced. I get that question a lot. So from the mortgage perspective, is there a good time? Is there a bad time to file for divorce?
I mean, not really, but I would say the biggest things to look for are going to be, how you're filing your taxes. If you are married, or I'm sorry, if you divorce in the middle of the year, you're considered divorced. So you have to file separately. So a lot of people like to wait till January 1st so they can file their taxes as married, file it jointly. And then the other thing I would say is the taxes, the escrow account. So towards the end of the year, that escrow account starts to build. And then, the taxes are paid at the end of the year. So if they're getting divorced in that, October to December timeframe, we need to address like what we're doing with that escrow account. Who's gonna, if they're selling, who's gonna get that escrow refund? If they're refinancing, what are they doing with that? So there's not, like I said, mainly for tax purposes, I would say January is the biggest time for filing.
Yeah. Okay.
Yeah.
That's a really good answer.
Yeah.
What is the number one mistake you see with people with mortgage refinancing or mortgage financing period when they have a divorce case?
Yeah. So if they're going through a divorce, the biggest thing that I see is not contacting a lender early, not contact, early enough to where they know what they can do. Contacting the lender after everything's final and realizing that their hands are tied because it wasn't, written this way, or they could have done something with, this lump sum payout, or, there's, so it's basically just not really getting counseled by a certified divorce lending professional up front.
Yeah. And under your license, there are certain things you can and cannot charge for. What can you charge for and what can you not charge a client for?
So I don't charge at all for consulting, for telling them what they can do to do a pre-approval. I'll do a soft inquiry on their credit so it doesn't hurt up front. The only thing I could charge up front is once they're under contract or once they decide to move forward with the refinance is an appraisal. Other than that, I don't get paid until a loan closes. But, I just like to help people. I like to let them know their options. I've gone through a divorce before, and I remember not knowing anything. This was way back when, before I got into the mortgage world. And, I just want to be a resource, to the divorcing team and the divorcing homeowner.
I love that. I can tell that you really do care and you're doing it from a genuine place in your heart. And I didn't know that you guys couldn't charge for that because I've asked you lots of questions. You have a lot of videos on TikTok, and I just assumed those were services that you provide that are compensated. But it sounds like that's a part of your giving spirit, that you've been providing this information and that you're welcoming people to reach out to you to ask those questions.
Yeah. I mean, I'm all about karma. I'm all about doing the right thing. And I know that, yes, I like to make money. We all do, but I know that if I'm doing the right thing and I'm helping people, they're going to tell their clients about me. I mean, their friends about me and family. And so, I'll get more referrals that way.
Yeah, I think people can see that.
Thank you.
I did want to also ask about what documents people should gather before, during, and after the divorce.
So when I consult with people up front, I want to see the mortgage payment. The mortgage statement, see what that is. I like to look at what the escrow account is, kind of figure that out. I have a whole intake form, but it's mainly pay stubs, bank statements, tax returns, W-2s, all the basic mortgage information.
Mhm.
But in addition to that, I want to see the draft of the decree if they've had one yet. I like to kind of sit down with the attorney and or at least talk to them and have kind of an open dialogue to where we're working together to make sure that everything's worded correctly to where they are successful post-divorce. Because there are some underwriters look at things a certain way, attorneys look at things a certain right way. A lot of attorneys, and they shouldn't know, they don't know mortgage guidelines. And it's a lot.
Yeah.
So, that's where I come in to try to, help them to make sure that, they're successful after the divorce.
I love that. So this is a little bit of a personal question, but how has your personal life, your life experience, your having gone through a divorce helped you or informed how you do your mortgage lending practice?
I just, the biggest thing is I just talk to people like, I would talk to maybe not one of my kids. I would probably talk to them a little bit harsher than the client, but maybe, one of my family members or good friends. I just want to be real with people. I'm going to tell them the truth. If there's something we can't do, I'm going to tell them. I'm not going to candy coat anything. I'm just, I'm not going to be rude, but, I'm just going to let them know the honest truth. And just be straight with them, let them know what they can do. I like to be proactive and try to anticipate what they might ask, because especially with, first-time home buyers, they just don't know the questions to ask. So I just try to educate them as much as possible.
I love that.
Yeah.
Yay. I'm sure you've gotten really good feedback from people on that as well.
Yeah, I have.
Super cool.
Yeah.
Anything else you think people should know? Popular questions that people ask?
So one of the other things I did want to bring up that a lot of people don't know, and I think we probably talked about this before, but let's say the husband doesn't want to pay monthly child support, but he wants to give a lump sum payout. And however that's negotiated between, the councils and all of that. Let's just say he owes her $200,000 in lieu of, I don't know, part of his company, whatever it is. So let's say there's a lump sum of $200,000, and we can't use that income for qualifying because that's a lump sum. She could take it and, blow it on something. But what she could do is put that into a trust. It's a personal revocable living trust. And she can set a distribution, and then we can determine what that distribution amount needs to be to qualify. As long as there's at least 3 years continuance. So if there's enough money to make those payments for 3 years, then we can use that monthly income for qualifying. So that's a good way of setting somebody up to where they can buy a house and have more income for qualifying. Because it's hard. Like if you're going from a dual income to, and houses are expensive. So if you're going from a double income, you're going from a double income to one, and then you're trying to buy a house by yourself, it's hard right now, especially with rates being higher. So I try to look at any possible avenues of getting them, more monthly income to qualify and to make the payments.
That is a really good suggestion. So rather than having one lump sum, put it into a revocable trust with distributions to come out for like at least 3 years or so.
Yeah, so the distribution would be monthly, and as long as it covers 3 years, then we can use it. So it can cover, depending on how much it is and how much we need, it can go longer than 3 years. as long as it covers 3 years. So we have to have a 3-year continuance.
Very nice.
Yeah.
That's super smart.
Yeah. And we could do that, use that right away. We don't
Mhm.
have to wait a certain amount of time or anything like that. So it's a great tool to know about.
Yeah. All right. So I know we became friends on TikTok. What is your favorite thing about being on TikTok?
So I just like educating people. I mean, when I first got on there, I was just like, oh my gosh, this is silly. It's just a bunch of teenagers dancing. And after getting into it and learning my algorithm, there's a lot of good content in there. There's a lot of very educational content in
Mhm.
there. And so I decided that I'm just going to just put out as much educational content as I can. And it's just fun, it's fun and it's interacting. You meet people, I
Yeah.
met you, and I love yours because I'm learning from you too. And so, I mean, that's what I love about it. And I love the amount of people that it reaches.
Mhm.
And it's fun.
Yeah.
Of course, I get a lot of dog videos too because I love dogs. So those are fun, but
Yeah, I get a lot of farm. I don't know why I'm into farm animals,
me
but I
too.
get a lot of farm animal videos.
I mean, so it's fun, but it's also educational, I would say.
Yeah, very nice. Public speaking. So do you do any public speaking engagements?
So I don't do, I mean, I will talk in front of like real estate agents. I do have a CE class that I can teach. I think it's called CLE for you guys.
Mhm.
CLE classes that are approved through the Divorce Lending Association that I can teach to whoever. We can teach it to a big group at the bar meeting, or we can do just a Zoom call with one company.
Mhm.
However we need to do that. So we have that.
That is
And
super
I can
awesome.
do it in person too, or Zoom, whatever's easier. But yeah, and I do a lot of trainings, more mortgage trainings, first time home buyer classes, working on one right now with an agent. So but as far as public speaking, I mean, I would say that's the extent of it.
It counts.
I'm not a motivational speaker or anything, but it'd be cool to be one day. But yeah.
Well, what you do definitely counts.
Yeah.
And I would like to invite you to one of our Zoom meetings for the North Dallas Bar Association. I think our 2023 calendar somehow got full already. Like, yay, very happy because we're always looking for speakers, but they would love to hear from you because I know our group would have a lot of questions for you.
Yeah, I'd love that.
All right. Well, thank you for joining us today. I'm glad you were a guest on this podcast. Instead of just our first Zoom and on the phone. So yeah, I'm very happy to meet you in person.
We should do some more live.
Yeah. What's the best way for people to reach you?
So I am Texas Mortgage Lender on TikTok. And my phone number is 512-517-7858. My email is wendydebrusin.benchmark.us. And if you're going to ask me how to spell it, it's DABRUSIN. And if you just put Wendy DeBrusin, I'm really the only Wendy DeBrusin, I think, in the world. So it'll find me.
Very nice. So yeah, we'll all follow you. I'm already following you, but I'm sure that the listeners will follow you and find your information super helpful.
Yeah.
So yay, thank you for joining.
Thank you.